So the market has been, well, a roller coaster lately, right? The big question on everyone's mind is what happens next? That's what we're going to break down today. We're going to give you a sort of technical trail map to help figure out the S&P 500's next move. All right, let's get into it. So let's get right to it. After all that chaos last week, is the bottom finally in? Or is this just a little breather before the next leg down? That's the million-dollar question, and we're going to try to answer it by looking at some really key technical levels. Okay, to make sense of all this, let's try something a little different. Let's think of the S&P 500 as the hero of our story. And like any hero starting a big, scary journey, the very first thing they need is solid ground to stand on. In market speak, we call that a floor. So let's set the scene. The date is April 6th, 2026. The market's just gone through some serious volatility at the end of March. It's kind of like the dust is settling after a big storm. Now everyone's looking around, trying to figure out where to go from here. This is where our story really kicks off. And this number you see here, 6,330, this is absolutely crucial. It's the low point we hit back in late March. You got to think of this as the bedrock, the foundation for everything. As long as our hero, the S&P, stays above this level, there's a fighting chance. But if it breaks below, well, it could get ugly fast. All right, so our hero has found some solid ground, but the journey is just getting started, right? Now comes the first real test, climbing the walls of resistance that stand in the way. And here they are, the first couple of hurdles. You can almost picture it, right? First up, there's this big immediate wall right around that 6,600 to 6,610 zone. That's the most critical one right now. If the market can somehow get over that, there's another smaller checkpoint at 6,662 that would really help invalidate this recent downtrend. So you might be asking, why is everyone so obsessed with that 6,610 level? Well, it's because that's where a huge technical indicator lives, the 200-day moving average. Now, this isn't just some random line on a chart. It's basically the market's long-term health check. And because everyone, from giant hedge funds to retail traders, is watching it, it kind of becomes a self-fulfilling prophecy. A healthy market trades above it, a struggling one falls below it. It's that simple. Exactly. And this is so important. It's not enough for our hero to just scramble to the top of that wall and touch it. No way. They have to get a firm footing, pull themselves completely over, and plant their flag. For the market, that means we need to see a clean break in a close above 6,610. If that happens, that's a huge bullish signal. That's the sign we're looking for. Okay, so let's say our hero makes it over the wall. What's on the other side? Well, that's where the potential rewards are. Let's look at the price for all this hard work, the potential upside targets. The path to the summit looks something like this. Step 1, you've got to break that first wall at 6,610. No ifs, ands, or buts. Step 2, if you do that, the next logical stop is the primary target, around 6,764. And if the momentum is really strong, step 3 is testing that big psychological summit at 7,000. And listen, that 6,764 number isn't just random. Technical analysts are laser focused on it. Why? Because they saw something last week called a demarc exhaustion signal. It's a bit of jargon, but all it really means is that the sellers were looking tired, like they were running out of steam. That's the perfect opportunity for buyers to step in and try to push things higher. But hey, every climb is risky, right? What happens if our hero slips? Any good climber knows you need a safety net. And in the market, we call those safety nets support levels. Right now, the immediate battleground is this zone between 6,461 and 6,500. This is where buyers and sellers are really duking it out. For the rally to stay alive, the buyers have to hold this line. If they can't, our hero might be in for a nasty fall. And this really brings us to a fork in the road. It's a clear choice with two very different outcomes. Path 1, if support holds, the idea that the bottom is in stays on the table and the climb can continue. Path 2, if that critical floor at 6,330 breaks, the whole theory goes out the window. That would open the door for a much deeper slide, maybe all the way down towards 6,150. So, after all that, what's the game plan for this week? Let's put all these pieces together and create one simple, clear map you can use to watch the action unfold. And there's one last little wrinkle to keep in mind. We have what you might call the April tailwind. Historically, April is a positive month for stocks, about 80% of the time. So that's good. But right now, the rally is running smack into what traders call a supply zone, right around 6,600. It's like a tailwind pushing you right into a brick wall. Something has to give.
So here it is, the whole trail map in one place. Let's walk through it strategically. Down at the very bottom, you have 6,330. That's the floor. If we break that, the bullish case is in serious trouble. Looking up, the absolute key pivot is 6,610. That's the 200-day moving average. A strong close above that is the green light we're watching for. If we get that, 6,764 is the next major target, and then the big one is 7,000. These are the numbers that matter this week.
So, there you have it. The market has its map. All the key levels are laid out. But the question remains, which path will it choose? The one leading up to the summit or the one leading down? We're about to find out.